Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Sunayna Tuteja. She's the head of digital assets and DLT at TDAmeritrade to discuss the run in Bitcoin, the 5th anniversary of Ethereum, and why investors must educate themselves while investing in digital assets. Sunayna, it's always great to see you. Welcome back to Trade Talks.
Likewise, Jill. It's nice to see you again.
Yeah, well, you know what, virtually, but we're still getting the job done. So let's talk about this recent run in Bitcoin. What has that been attributed to? Does it react to macro conditions like traditional asset classes do?
Yeah, Jill, that's a great question and something that's been a point of conversation and much debate, not just within the crypto community, but I would say in the overall financial community. You know, if you think about the genesis of Bitcoin and how it came out of the last big crisis that we know, the global financial crisis, and the 10 plus year run that it's had, it's pretty much lived and grown in a, all bull market, right? So the current macro environment, frankly, has been the first time that Bitcoin has been stress tested, right? The other interesting thing about Bitcoin is, I find it fascinating that in its decade-long existence, the number of narratives that have been ascribed to this thing called Bitcoin, everything from it's a payments layer to digital gold to a hedge against inflation, uncorrelated asset, et cetera. In a way, it's almost become like a Rorschach test, and everybody kind of sees the opportunities and the downside that they want to see. What I would say is, in terms of the current bull run that we've seen, it kind of broke through the 12K resistance level. It's fallen down a little bit, but I think that was a significant litmus test for Bitcoin, given, where it was in March. And I would say, a lot of those narratives were kind of stress tested in the early months of this crisis, as it was moving in tandem with traditional markets. But I think now what we're starting to see is the resurgence of the narrative that's really aligned with the digital gold aspect of Bitcoin, but also this overall macro conversation that we're having around USD and hedge against inflation. And we've seen some traditional Wall Streeters like Paul Tudor Jones very publicly come out stating their investment thesis in Bitcoin, really anchored in that notion about kind of the hedge against inflation. And just this week, we saw one of the first publicly traded companies, MicroStrategies, even come out and on their earnings call, kind of share how they are adding Bitcoin to their treasuries, again, with this notion of, hedge against inflation. So I think that's kind of becoming one of the primary drivers.
So it sounds like this move could be sustainable.
Yeah, I think one of the signals that I look for that gives me a lot of comfort and I feel bullish about this run is if you look at the emergence of a net new unique addresses, what that signifies is the entry of new market participants, number one, but also if you look at the amount of Bitcoin that these wallets are holding, they're starting off with small amounts. So again, it's perhaps a leading indicator that new market participants are starting to enter, and we see that even from our vantage point, just the level of interest and demand and heightened awareness amongst our active traders, retail investors, and also the RIA community. So I think that kind of helps us think that this bull run is more sustainable for the long term.
I want to talk to you about Ethereum, but before we get into that, Sunayna, let's talk about this concept of DeFi, decentralized finance. Give the audience a brief background on that.
Yeah, so DeFi is very much kind of anchored in the Ethereum network, and what I mean by that is oftentimes Ethereum, Bitcoin, the two biggest cryptocurrencies that people recognize are kind of lumped together in this larger crypto ecosystem. But there are some really important different points of differentiation, right? So if you look at Bitcoin that we just touched on, its primary use case has really emerged as its role as an asset, and then we really think about the technology layer of Bitcoin. Whereas with Ethereum, over the last 5 years, what it's really emerged as is first as the technology layer upon which we're seeing a lot of interesting innovation and just a proliferation of fascinating use cases ranging from smart contracts to stable coins and to DeFi that you touched on. And really at its essence, what DeFi signifies is perhaps the next phase of this notion of democratizing finance using blockchain technology and creating financial instruments that make it more peer-to-peer versus having to go through a centralized mechanism.
So if I understand it correctly, Ethereum could also, it's a store of value, it's something you can invest in, but it also is a technology. Is that correct?
Absolutely. And, I think that's one of the really cool aspects of crypto at large. In a lot of my past roles in fintech, I've kind of been on the front lines of commercializing new technologies like AI, machine learning, you name it. But what you're really dealing there is like the tech stack, right? Whereas when you work with blockchain and crypto, it's this multidisciplinary nature where it is the technology of blockchain, but there's also an inherent asset class built into it. The difference we see between Bitcoin and Ethereum is with Bitcoin, the asset class aspect of Bitcoin is becoming more of the primary use case, whereas with Ethereum, while people can buy, trade, hold Ethereum, and many do, the technology layer has just spurred a lot more innovation, and all the building and the protocols on top of it. There's kind of been a Cambrian explosion just in the 5 years of its existence.
Why is education critical for investing in Ethereum and digital assets in general? We're certainly seeing Robinhood traders and people with more access to different kinds of platforms come on. And a lot of times these take on a momentum trade. But as you just described before, there's so many different classes within the asset itself. It sounds like you really have to understand it before you start putting capital towards it.
Yeah, that's a super important point. And as you know, at TD Ameritrade, we've always maintained that education is a silver bullet. Like even with investing in traditional asset classes, we know, and through data, we've learned over and over again that an educated investor is a more informed and empowered investor and kind of best set up to make the decisions that suit their needs so they can kind of, own their financial freedom. With digital assets, I would submit that education is even more paramount, just given the nascency and perceived complexity and the layer of technology that comes into making decisions. So we very much subscribe to the notion that it ought to start with education, and that's really kind of been our approach, whether it's working with our active traders, retail investors, and now more and more with our RIA community, which is understanding the fundamentals, but then also, kind of delivering it in kitchen English and making it analogous to what they know and what they understand today. Because yes, while digital assets are very different, they're also very similar to what our clients understand. So kind of creating that analogous aspect. This new asset class is kind of making it more inviting versus intimidating. And we're definitely kind of seeing a lot of strides in that space.
All right, Sunayna, great insight as always. Thanks for joining us on Trade Talks.
Thank you, Jill. Wonderful to see you.
Same here. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.